Many cryptocurrency investors have been anxiously awaiting for the US government reports that would specify what the Biden administration and regulators intend to do about digital assets. The shrewd investor will share with you the latest news about where crypto regulation is headed. One thing is becoming crystal clear: the US government believes that increasing enforcement actions may be a key step as it sees many potential risks in cryptocurrency. The Treasury Department's report makes recommendations for the government to keep up enforcement operations, examine crypto risk assessments, and work on creating a digital currency. The White House Office of Science, Technology and Policy also published a report assessing the technical aspects of a digital dollar, while the Commerce Department's report addressed competitiveness more broadly. The Justice Department said it would initiate a digital asset coordinator network. This would consist of a group of 150 federal prosecutors nationwide who would specialize in investigating and prosecuting crypto crimes. The reports clearly identify the real challenges and risks from digital assets used for financial services, Treasury Secretary Janet Yellen told reporters in a briefing. She continued, "If these risks are mitigated, digital assets and other emerging technologies could offer significant opportunities." These reports follow a directive from President Joe Biden to federal agencies to examine various elements and problems surrounding the cryptocurrency environment. The directive also requests that agencies provide suggestions for how the United States can be a leader in the digital asset sector, and address any potential risks to monetary stability or consumer protection posed by crypto. The federal agencies made it apparent after 6 months of research that while they are paying close attention to cryptocurrency, they are not yet prepared to offer a clear course of action. The most significant questions are still unresolved. What makes a token a security, and which ones should be regulated? The Securities and Exchange Commission Chairman Gary Gensler asserts that existing federal securities laws also apply to the crypto industry. He even went so far as to tell a US senator on Thursday last week that the asset-backed securities market took 10 or 11 years where they did these exemptive orders or relief to individual issuers, implying that a similar process may need to occur in crypto first. Digital dollars. Another important question for the industry is whether the US will issue a central bank digital currency, CBDC. The reports offered some ideas and suggested the Federal Reserve continue its ongoing CBDC research, experimentation and evaluation. Federal officials, however, concluded that no digital dollar should be created unless it's found to be in the national interest. Who then decides what is in the country's best interests? That's a little unclear. Since the Fed will be in charge of managing it, the Fed will undoubtedly have a say in this. A directive from the Biden administration might also be necessary. Congress might also be required to participate. Future legal guidance from the Justice Department, which is anticipated to specify the credentials the Federal Reserve needs before it can issue a digital dollar, may provide the answer. According to a senior government official, the practical response is all of the aforementioned. Although the Fed is independent, it will work with lawmakers, the government, and other federal agencies to determine the best course of action in the interest of the country. Fed officials, including Chair Jerome Powell, have said they don't intend to move forward without agreement from both the White House and Congress. Treasury Secretary Yellen, during the press briefing, said, "Right now, some aspects of our current payment system are too slow or too expensive." The report encourages us to continue working on innovations and promote a system that is more efficient and inclusive. Other proposals? When asked what other practical next steps the reports suggest, senior administration officials responded that they are looking for a redoubling of investigations and enforcement efforts against the industry. The Federal Trade Commission and Consumer Financial Protection Bureau were underlined by the White House as examples of organizations that should redouble their efforts to monitor consumer complaints and to enforce against unfair, deceptive, or abusive practices. The Treasury will also work on 2 other reports, one to evaluate the risks associated with decentralized finance, which is due in February, and another to examine non-fungible tokens, which is due in July. But the next upcoming report, which will likely be more influential, is expected next month, detailing potential finance stability risks from the crypto industry. Congress is working on a number of initiatives to create crypto-related industry restrictions. A large portion of them emphasize the Commodity Futures Trading Commission as the primary regulator of cryptocurrency activity. According to the White House report, Biden might advocate for federal licensing or monitoring of non-bank payment providers as well. Non-banks are increasingly providing payment services, including issuing money, or money-like, liabilities and processing payments. On the one hand, participation by non-bank payments companies may contribute to higher levels of competition, inclusion, and innovation. On the other, if these firms are not adequately regulated and supervised, there may be risks to consumers, the financial system, and the broader economy, one Treasury report said. The report did not describe what this structure might look like. We'll bring you up-to-date news as soon as the next report comes out next month. By then, we might have a better idea of where we are headed in terms of regulations. If you enjoyed this video, don't forget to hit like and subscribe, and be sure to turn on bell notifications, so you don't miss any videos just like this one. Until next time, this has been The Shrewd Investor, thanks for watching.